friend of mine that joined us. Haven't had him in a while on a webinar. We did so many events together. Larry Gann's very well known in the industry, one of the top gurus that I've known. I've learned so much from him, and I want him to come on the show because, I have so much to talk to him about, and I want to share his thoughts on the market, want to show you his experience and everything else to kind of show you guys how to be a very good trader in today's markets, because that's what it's all about. It's not about the winners, it's about the losers and controlling those losses. So, Larry, welcome to the show. Good to see you, Larry.
Hey, thanks so much for having me here today, Fausto.
Yeah. Where you logged in from now? Where you living? You living in the Bahamas now, or
Austin, Texas.
Austin, Texas. There you go. I love going to Austin. I was there for the I went for the Formula One Grand Prix. I actually had to do which was not too far from you, and great town with food. You got like all those food trucks and like all the good restaurants down there and stuff like that. Everyone moved down there too. Tesla moved down there. So is it getting too crowded yet?
It is too crowded. I've been here for a while, but I grew up in Texas and I went to school down here at UT, and so it was much different back then. But it's still a great city, and I like it here. Good place to be. So it's pretty, and like I said, a lot of good food and entertainment.
Do you do you go to the college football games too, or no?
Yeah, I really like that. I used to go quite a bit. I'm watching on TV more, but I'm a big Longhorn follower. So we'll see how they do this year. I'm looking forward to it.
Yeah, I went to. Make a long story short, one of my students was actually the head coach of Texas A&M, Coach Kevin Summers. Yeah,
who was it?
Kevin Summers.
Oh yeah.
So he invited me down, and the most unbelievable experience. So I'm a football fan myself. I'm a Jet fan. I was never a college fan. I went there. I mean, what a totally different league. So I was down in the locker room. I was praying with them in the locker. So anyway, I ran out of the field with all the players, and I'm like, oh my God, I'm going to get trampled. So they're going to smoke. So I was sitting back. I'm like, I'm not going in there. I'm not going back there.
Yeah.
And all of a sudden I got bombarded, and all of a sudden they started packing me up. I'm like, holy crap, I'm stuck in the middle. So oh my gosh, I got my phone and please don't fall. If you don't fall, it's like almost like you ever see the commercials of like what was it called? The MasterCard, the MasterCard commercials, like, priceless. And it was just great. But what a great experience. Loved it. People in Texas, just unbelievable. Not too much to do in College Station, but it was a great ride.
Not much to do there.
Not much to do there, but yeah, Texas definitely loves their football. But with that said, so let's talk about you, Larry. Like, a lot of people here know that, listen, you're human just like every other trader out there. You're a guru for a long time. How long have you been doing this for now?
Well, how long have I been trading and
teaching?
Teaching. I started PowerCycle trading right about 2010.
2010. And how long you been trading for?
I started my trading journey back in the 80s. I was fortunate out of college, got a job at this company called Coastal Corporation, which was a big integrated oil company in Houston. They had refineries, and they would actually have a training program to train you to teach you how to trade crude and oil products. So I got my foot in the door there. I remember the first boss I had, he said, if I tell you to wear a green suit, you wear a green suit. So he was a really tough guy. But anyway, got accepted there, and they would actually train you. So they sent me down to one of their refineries down in Corpus Christi, Texas. I remember it was for about 3 months, and you just sat there and learned everything about kind of that you could absorb about refining, the ships bringing in oil, producing products, all that. So then finally got into the trading group on cargo side. Sent me out to Singapore for a couple of years, traded, learned to trade products and Asian crudes out there. And then back in about the mid 80s, I got hired for this job. It was Transworld Oil, which at that time they were the largest oil trading company in the world. It was Transworld, Fibro, and Mark Rich. And so spent about 17 years there. And we had the corporate offices in Bermuda. So I lived there for about 16 years, ran the trading group for 10. And that's where it was just really exciting. We traded pretty much everything. We traded foreign exchange, all the futures markets, crude, everything you can imagine. So, and that's where I started trading options. Back in 1987, we started selling, options on cargoes of oil. So really exciting time, but that's kind of where the career started as far as the option side of things, and kind of never looked back. So
And by the way, everybody, he's going to show a little bit about his style of how he converted to one to stock. So don't go anywhere. We're going to, when we get to the end of it, he'll show you his style. But getting back to, why how you got into the crude, into the options. And like one of the things I always try to tell everyone, Larry, is that we never really started. You had to start somewhere, right? And you just kind of like learn to say, you know what, this style works a little bit better for me. But how did you get started with the university that you started? With PowerCycle trading, like how did that come to fruition?
Yeah, that came about. When we moved back to the U.S. and so moved back to Austin, and I wanted to do something different, but something still on the trading side because that's where my career was. So what I started first doing, I started, I loved options, and I didn't see really that many people doing options. And I thought, okay, the online thing was just getting started. So I just started a small little YouTube channel, and I would post, put up trades that I would do, option trades and things like that. And it started kind of growing organically. And then I put up a course, and it went really well. People bought the option course, and it kind of started from there and just kind of took off. So it's something I've always wanted to do, is teach, and then the trading side is the only thing I really ever knew, and so it's just been a learning experience as we go. But I enjoyed the teaching part of it, to kind of pass on the knowledge that I've gained over the years of my trading, and try to pass that on. Hopefully, people can learn from it, not make the same mistakes that I made.
Yeah, I mean, listen, it is a very big failure rate. I tell everybody, why would you want to get in business where there's an 80-90% failure rate? And it's like in the restaurant business, but we love the restaurant, right? But why would anyone do it? Because we love what we do. And people think like, oh, you guys must make so much money in it. But the thing is that the reason why people fail, like you just mentioned yourself, because you just went through a training program, just get that job. A lot of people don't want to get educated. Why is that, Larry? What is your reason? Like I have my reason I could share with you, but like I want to hear from you. I want the audience to hear. Like, why do people not get educated? Why do they want to go out and do it themselves?
Well, I think people don't want to put in the time. It's just things are too. They want instant gratification, and that's not how you're going to make success. I mean, if you depend on what you've ever done. If you work hard and stay consistent and build on your knowledge, that's going to make you successful over the long run. So trading is the same way. You can't just come in and think, oh, there's just that holy magic grail of something that's going to work. But so what I've tried to do is, when I teach people and my members or clients, I want to really teach them where they can really keep their risk super low. So then if they don't do well, they're not going to lose much money, but then they're going to see some success, and they're going to get excited when they have the good trades work out. So I try to really manage the risk, and the risk is the key thing. And that's, what I do with the option side of things, and doing kind of what we call option spreads. So we're long short. So, we're always kind of semi-hedged in any kind of market environment. So that's what excites me about it. And then, but you got to put in the time, you got to put in the work, and the ones that are successful put the time in. Just
and
like
the ones that don't,
and the ones that don't go somewhere else, and they fall out, and they don't come back.
Exactly. And you know what? It's something that you always have to kind of stress out there. Like, listen, I tell everyone I'm not really a big social media person. I was never a fan of like, telling people by giving all this free stuff to them. But there's just so many people doing it, and then all of a sudden it makes us look bad. Be like, well, if you're such a great trader, why do you teach? You know what I mean? And how many times have you heard that phrase before?
Oh yeah, all the time. Yeah.
So the thing is, like, I always look at, if you surround yourself with good traders around you, because that's what we basically do, we all become better traders, and you're trying to just find the people that really want to learn the right way. So, regarding about the, with your experience over the years, what has been the biggest challenge that you found that traders have? Like why? Like what is making them most successful versus the non-successfuls?
Well, I think it comes down to what I kind of call a process. So I try to make it. To me, to be successful at trading, you have to have called the direction, timing, and then manage your risk. All right. So what I've done at PowerCycle Trading, I've kind of tackled all three of those sections. So everything goes about direction. You make money on the price going up, price going down, right? And then the other part. So if you dissect and break down your good winning trades or your losing trades, the ones that you're going to have the best accomplishments on, or winners, are going to be the ones where you did get the direction right. But then the other part of that component is your timing, right? So you need to get into the trade at a good time. You don't want to get in too early, too late. That can create a bad trade real fast. And then the third part of that is managing your risk, and that's where the options are great. So it comes down to you having some kind of directional system that you can follow that kind of takes your emotions out of your trading, makes it more mechanical. Then your timing, which is what I call cycles and momentum, and then your risk management, which comes in through, I like to use option spreads, because then you're kind of long short, keep your risk super low, but also with the options, you've got great leverage, so you get good return on your risk. So that's kind of the combination of things.
You hear like more and more people, like, we have a lot of options gurus that come once in a while, but like, why is options, like, everyone think it's such a big failure rate? Why are they failing in options? I do more day trading on stock trading. I know how to explain that, but like, what's the biggest challenge that people have with the options that they can't figure it out? Because there's so many people, like Larry, like, what is your style? In the way, what I'm leaning to is like, what is your style? Because there's just so many ways of trading options. Like when I trade stocks, it's just two in this black and white, it's buy or sell. That's it. But
Yeah.
like, why do people fail? And they hear from all these other gurus about why they saying, oh, my options is better than Larry's options, trading style.
A good question. I think it's because it's the way that they trade options. Most people they don't want to put the time in. So my way of trading options is totally different. So most people think, okay, well, let's go long, right? Everybody knows, okay, if we want to go long, go short. That's the only way that they can think when they're first coming in.
Mm-hmm.
But with options, if you learn correctly, the option spreads, there's so many different variations of spreads. You can keep your risk so low, but your returns can be unbelievably great. Your return on your capital at risk. So it's better than just buying or selling, going long short, because we can do those same directional trades through option spreads, keeping our risk low. So the success rate is actually really high when you use option spreads versus just going, okay, let's just go long calls, let's go short or something, go long puts. And then you have all these things that affect you, time decay, things like that. But when you do spreads, you can strip out all of those kind of negative parts of the option trading and make it a really great way that you can be successful, but with a lot less risk and a lot less stress. It takes the stress out of your trading as well by using spreads.
Good. Well, which leads us to now. Now, obviously, we're going through some really, some crazy times. We've been through, just like you've been around as long as I've been, we've been through the financial crisis. We've been through, we obviously, most people probably have just been through COVID and stuff like that and everything else. The list goes on hurricanes and stuff like that. What have you noticed that's going to happen now going through an election year? We have inflation that's crazy. We got the Fed that's coming out with announcements if they're going to raise rates, whatever. How do you prepare? Like, we tell someone how to prepare for the next, catastrophe, or what do you see it's happening in the market right now that you're preparing to how to trade to, make it a profitable year?
Yeah, well, again, that's the beauty of, I don't want to sound like a broken record, but the option spreads or just trading options in general, but especially with spreads, no matter what environment you're trading, you can just keep that risk super controlled. And so then, I look at just kind of, you're mostly kind of day trading, so your risk is limited to your daily exposure duration.
Right.
So what I like, though, are the kind of the swing trades where, you could be in for a day, or you might be in for a week or 2 weeks, but I don't keep the duration much longer than that. So then then when we get in a really volatile time, we can cut back on our duration. But the other beauty of it is we can then focus on certain option spreads that really knock down your risk. And if I have time, I can show you a couple examples, but there's like the butterfly spread. There's what we call the long condors. And what we can do with those kind of spreads, we can really, in any market, but especially when you get in high volatility, you can really sharpen and define and home in and reduce that risk. But then you can use your I like to use directional tools, option activity, things like that. I look at, and we can focus on, profits based on a low risk with a butterfly, but the returns can be, I'll show you some examples. You can have 2-to-1 up to 10-to-1 or 15-to-1 returns sometimes with super low risk. So it makes it, actually fun. Plus, you have the potential to make some really good profits and keep your equity stream kind of going from, from the left to up to the right, not a lot of chop up and down, not a lot of volatility in your trading. So that's kind of been the key.
And we're going to share that just in the next few moments, everyone out there. But Greg on YouTube is saying, it does take a little bit of a luck. Is that true, or?
I don't think luck. I think it's just knowledge and experience. I mean, sometimes you have luck, sometimes you don't. So you can't just do anything in your life based on luck. You'll never get anywhere. So
I tell everyone that all the time. I said, listen, you know what? You do not want to be lucky in trading, because
you want to start out being unlucky, because then you're not going to have the pain.
Exactly. One of the probably the worst things that ever happened to anyone in trading is that they make money in the beginning as a trader because they think it's easy, because it happened with COVID. People started jumping in and sitting home like, got nothing to do. Let me just start trading, right? And I'm like, so I'm like, damn, this is easy. I'm making more money. And then now all of a sudden, like, COVID's over and everything, and people are like, you know what? I had such a great return. I was doing great. No matter what you did, you did great. I mean, only people did terrible the ones that were in the market before the COVID hit.
Yeah.
And right. So then all of a sudden, now everyone's like, I love this game. I'm not going back to work. I love working from home and stuff. And now I'm not making. What am I doing wrong? And and that's where the growing pains come in. It comes with experience. Now regarding about your style, like you said, like, listen, why don't we show some people a little bit about what you're talking about, and then we can kind of maybe even if someone has any questions here. I know there's a lot of people that are interacting, want to ask, but why don't we go and show them, like, listen, because my thing is we got to get prepared. We're going into an election year. We really, really got to get to know what to expect. And listen, every day is a new adventure, but you got to get prepared for the next catastrophe, because there's going to be one,
Right.
And listen, you could really leverage yourself big time, because sometimes it comes to a point, and I don't like to compare this to gambling, but if the deal is showing 6 and you got 2 aces, what are you going to do? Stay? You know what I mean? Like, there's a time where you got to go, this is it. I got to go all in, and that time will come. So let's bring up your PowerPoint right here and share it up really quick.
So can you see it?
Yeah, everybody can see it.
All right. So, so for example, here's a really good way to keep your risk super controlled low. So this is just, what I call how to trade uncertain markets, low risk, but high return strategies that you can use. And 2 of the ones that we use quite a bit to really bring in our risk, but have great still potential returns, are the butterfly and the long condor. So just a little bit of background on them. So the butterfly, long condor, and the question is, why would you trade them? We can structure it for very defined risk, and they're great for hedging, because remember, these are spreads. So we're going to be long and we're going to be short, but we're going to be long short using options, right? And so then what I also like to do, it comes down to your direction, timing, when do you get in, when do you get out, and then manage that risk. So what I call, these are kind of targeted directional trades. So what we try to do, or what we do is, I'll look at the market using my trading indicators, and I like to use Fibonacci moving averages for support resistance. And then we'll, look at what we call the implied expected move to see with an option how far up or down within a different option series you can take the trade. And then we'll put together potential target areas, and then we'll target those areas using a options spread, like maybe a butterfly or a long condor. So I'll show you some examples. So they're also really great for what we call directional pinning trades, where the market will go out on a certain expiration series. The market will actually pin at a certain strike price. So let's say, Tesla or something, goes out and expires at the strike price of 200. That would be, a pin. So those are fantastic trades where you can get some huge returns. I'll show you an example on that. And then these are great for high volatility markets, because 2 things. When you're doing a butterfly or condor, you're long and short. So when you sell options, you're basically selling time and volatility. So the higher the volatility, that increases your what we call the implied volatility. So you get more premium. So that's a benefit. And then the other thing, you can trade with these spreads, you can trade really high price stocks. So, if you wanted to trade, I'll show you an example. Back when Amazon was over, $1,800 or anything that's a high price stock, if you're trying to buy 100 shares to make it equivalent to an option contract, let's say, it's going to cost you over $100,000 or whatever for 100 shares. But with options and with spreads, we can do that for a fraction of the cost. These trade durations will look at typically, 1 day up to maybe 2 weeks. They always have what we call positive data. So when you're just, strictly, a lot of people fail at trading when they're trading options because all they know is let's go long or short. So they buy options, they'll buy calls, they'll buy puts. But then if the trade doesn't go the direction they want, they lose still because the time decay eats them up. So these will give you positive data. And the returns can be from 2 to 1 to even higher, up to actually 10 to 15 to 20 to 1. So I'll show you a couple examples, but first here's just kind of to show you simplicity of this. So here's like constructing a butterfly, okay? So if you've ever done a call debit spread, so here would be you're long a call, say short a call right here. And so right down here, that says 10-10. So this was like on the NASDAQ 100. And so you're long the 10-10 call, short the 10-20 here. So $10 wide. And so one option contract's equivalent to 100 shares. So that would be a $1,000 wide spread if you did one contract. All right. So then your risk here is your debit paid. Okay. So you've defined your risk. If you just did this debit spread right here, you've got a defined risk trade. So that's max you could lose. All right. So then your difference is your potential profit. So if it at expiration goes out here at your strike price of 10.20, your profit would be 700 on that risk of 300. But with the butterfly, what we can do is if we want to reduce that risk, or if we want to have that risk lower to go in, we could just simply do this as what we call a butterfly trade, either legging into it or just doing it at the same time. And all we have to do is sell a credit spread against it or combine that. And so in this example, then if we did added a credit spread where we sold this call here, bought another call. So now we're going to have a butterfly. We brought in a $200 credit. So that's going to reduce our risk that we had on that debit spread of 300. We're bringing in that credit of 200. So now we just reduced our risk down to $100. And we're going to have a potential return leverage of 9 to 1 on that kind of trade. So that's the beauty of it. And so let me flip to the next screen. So then by doing that, we've created this simple structure here, which is called a butterfly. And so we have this, we call this the profit tent. So if we go out here right at that top end of the strike here, that 10.20, that'd be your max profit, but you have profit anywhere inside that tent. So, your risk is 900, but your potential is you can make, 100% return. You could make 200% return, all the way up to 900% return on this if it goes out at your strike at expiration. Now, a lot of times it's not going to do that, but you still have a big return in that area there, which if you put up $100, even if you made $50, right, that's a great return based on, lowered risk. And then the difference here, the other one that we do a lot of is what we call the long condor. So it's basically the structure is very similar to the butterfly, but we're going to widen out the profit zone. So this is a really great way to trade, breakout trades up or down. We'll do this and we can kind of cap the upside and the downside with this condor structure, but we can make it really low risk trade. And we can also then, what we try to do is negate any kind of theta decay. So in this example, we're long that call here and we're short a call, but we're going to spread out the zone of profit and then sell a credit spread further out like that. So we have this bigger profit zone. All right. So these are two that you can do in any kind of market environment. But when we get into high uncertainty volatility, these are kind of the two that I really kind of focus on to look for. And then you've got, a lot of different variations of these that you can go through. If you're doing the butterfly, I call it kind of the butterfly family. And these are both components of selling time and volatility. So there's a lot into it that you can get into, but I'm just giving you kind of overview here today. So we can do long call or put butterflies. We can do what we call a broken wing, call or put butterfly. We can do unbalanced butterflies, iron butterflies. I'll show you a pretty cool one that we did here not too long ago was a lotto butterfly. And then these are just great for hedging because, they're spread. So if we're long something, we can just immediately add a short side to it. And then we have the long condor. So it's just a a lot of different things and variations that we can do. Now, when we have a butterfly, the other thing we can do is we can adjust our risk and our profit based on the wingspan of the butterfly. So, if let's say you're collecting butterflies, and if you're a butterfly collector, it's probably going to be a lot easier for you to get a butterfly if you have a big, fat, wide net, right? But so the similar kind of thing in trading with the butterfly, we can make it either a really wide butterfly to give us a big profit zone net. But if we really want to focus in and define our risk to a much smaller risk, we can narrow that butterfly and have super low risk. But also then if we do get the target hit, we're going to have a big, huge payoff. All right. So these are pretty exciting and fun. Now, here's just one good example to illustrate how this, with just a butterfly, you can trade a really high price stock. And so this was back, when Amazon was trading over $1,000, per share. And so this is going to be trading, doing an Amazon trade back then when it was trading at, this is an example back when it was trading over $1,700. So it was trading at this point $1,782. So let's say you went out and you bought 100 shares. That's going to be over $178,000, right? And so in this example, we were looking for a target here to move to this 1830 area where my pointer is. And so we set this trade up with the butterfly. So instead of buying, the shares, we did this with the butterfly. And look at the cost of this trade. It was to control Amazon, which was trading up here at $1,782. We were able to do this with the butterfly that cost us $80. Okay, so that's the great benefit that you get once you understand these spreads, is that we could control and we can trade a high price stock in a high volatility market for just a fraction of the cost. So here was an $80 cost controlling a stock that was trading over $178,000. So we just did this with the butterfly, and we were targeting that area, that 1830 that I showed you on the chart. So this was buying the 1820 call, selling the 1830, then selling the 1830 again, buying the 1840. So that's $10 wide, which would be $1,000 for an option contract. So remember, one option contract is equivalent to 100 shares. Cost of the trade was $80. That's our risk. So if everything went wrong, we lose $80. But if we get any place inside of that profit tent here, we can make a great return. So this has potential then to make the difference of that spread width less the cost of $920. Now that would be up there at the very top at expiration. That would be over 1,100% return. So you're risking $1 to potentially make $11.50. So that's the kind of cool and exciting thing with the butterfly and some of these option spreads. So the other thing I wanted to point out was how this can really increase your profit just within one day. So here it was in the morning. This was like in the morning about, after the market had opened about an hour. So it was trading right here. It was trading at 1836. So, we're looking for the perfect place would be 1830, but it's trading right here at 1836. Now we've got our risk is $80, but at that point in time in the morning, this is up $150. That's still a good return, right? 150 on your 80 at risk, that's 187% return. But here's the cool thing. In the afternoon, you can see all this area in here, that's all still potential profit. And that's what we call the time component and volatility that's in there. And at expiration, those two go to zero. So we're sucking out that potential profit by waiting towards the end of the day. So this is just to illustrate the how this can really compound that return. So here it is in the afternoon, towards the end of the day, about 30 minutes before the close. And you can see this thing is now up to a profit of $615 a spread. So this is because all that implied volatility and time is being sucked out right into expiration. So this went from, up 150 to going out up $614 per spread. So that's now a 769% return versus if you just did the stock, you would have made 2.69. So that's the beauty of, options. You can just get super controlled, low risk, but you have these potential for these potentially high leverage returns. Now, this is really a fun one. This is I've got alert service, so I'll send these trades out. And this is one of the trades that we did. This was back in February. We sent this out. I sent this out as an alert. This was on Tesla. So it was trading when we set the trade up. It's trading at $189.35. And so this went out to my alert members. It says here, if you can see, it says new Tesla long. It's what I call binary monthly option pinning trade. So we're looking for this to, pin. It says monthly expiration at 200. Okay, so that would be a week later. So went out and bought. This is a butterfly. So you can see here, bought the 197.5, 200, 202.5 call butterfly for $12, 12 cents or $12. All right, so that was our risk, $12. That's pretty low. And then here it was on the day of expiration. At that point, it was trading now at our target of 200. And so this was kind of midpoint during the day. Now it was up $215 per spread. That was a 1,791% return, and it went out. I said, wow, it went out towards the end of the day. It was trading right there at 200. It was up $230 a spread. That's over 1,916% return. So these are, what can happen when you're using a butterfly. But the thing is, your risk is so low. So here was a trade where we set it up right there, and then we were targeting this 200 area. That was based on a lot of option activity, Fibonacci levels, moving averages, which I kind of use what I call price target mapping. And so then we set the trade up, and it was just kind of a simple, butterfly, and it was right here. It was going, we were targeting 200, and so we bought the 197.5, sold the 200, sold that again, bought the 202. So we had this butterfly on for $250 wide spread. So you can see here 197, 200, 205. That's $2.50 or 250. Our cost of the trade was 12 cents or $12. So potential profit was $238. If at expiration went out there, that would be 1,983% return. So these are ones that you can put on. So we'll put these on, a lot of times because we have that risk so low, and then they're either kind of what I call sometimes binary, you either make it or you don't. So it's kind of a fun thing to do from time to time. You see a good one. So, and then this is where it went out at the end of the day on expiration day on that 16th. It went out pretty much right there. So rarely do you ever see them pinned to the penny, but this one did. So this one went out up $238 a spread, up over, 19% return. So hopefully that illustrates how you can then really control your risk. So, when you're in a really high uncertainty, high volatility market, these are a great way to go. So I wanted to point that out. So that is what we're looking at now. If you want to see a couple that we were looking at today in our trade room, was ones that we might look at. Let me see if I can pull. Do I still have time here, Fausto? I'm not sure. Let me show you what we're looking at today. We were looking at possibly a butterfly.
We got plenty of time. Yeah, we got plenty of time. We got it.
Okay, so I can just show you a couple things we're looking at today. I have a virtual trading room as well. We were looking at AMD, had huge profits and had a big spike up. So you can see it's still up about 5%. It's come off. It's come into, this is some major resistance here, this 200-day moving average, and that's the 382. But there's really good potential, I think. And one thing we're looking at maybe doing is setting up a butterfly targeting this area here, this $160 area. You see that? That's a 50 simple moving average, and then we've got the Fibonacci retracement area, 50% retracement, and there's a lot of option activity there. So the trade, this is a way that you could trade it with a very low risk butterfly. And let me pull this up. So we were looking at possibly doing a butterfly on this, and we'll keep it. I call it put on my watch list. So what we're going to look at is this butterfly. We're going to target this area up here. So we'll see where it closes today. We'll see where it is tomorrow. But you've got this currently, it's into this resistance, this 200-day. But I think AMD has potential. It could maybe come down, fill the gap. But if it holds here, I think into next week, we could see it grind back up into this area here. That's at the 160. So what we're looking at is doing a butterfly targeting 160. So we could go out and we would go out to next week's series. This is the 9 August. So that's next Friday's expiration. We could buy the 155, 160, 165 butterfly. So here we are, we'd be long a call at the 155. And then we're going to be selling 2 160 calls against it and buying 165. So if we did that, that's a butterfly that's currently going for $39. Okay. Now, if we get a move next week to this target of 160, this could be up over $450 on that risk of $39. All right. So basically and then we'll look at different, we can look with our analytics, we can see what our profit will be at any point in time. So basically what we've got here, we'd be long a call here, short a call. So we'd be long the $155 call here, short the 160 right there. That's our target. Short the 160 again, buy to cap the risk to the upside, the 165. And if we go out there next week, this could be up huge. So here's we can look at our what if. So if I put my calendar over here, right here, and I put, let's say we go out to I'll say, what if it on next Wednesday, the 6th, see August 6th, what if next Wednesday, the 6th is trading at $160? Well, if it's trading at $160 next week on the 6th, see that purple area right there? I'm just hovering over it. This trade would be up $67 or $68 on your risk of 39 or 40. So that's still a pretty good return. But look at all the potential profit. All that black area is profit. So I'm going to put over here, you can see my pointer. I'm going to put this, it says price strikes. I'm going to put this to I'll put it to say 155. And then we can see what it will make at different price points, on each given day going into next week. So let's say, for example, next week it's trading here at 155 I'll put this on let's say Thursday, the 8th. You can see it's going to be down $27. And so the reason, it changed. It's 145. I thought I had it 155. Let me put it at 155. So it's going to be about break even. We needed to get it above 155. See that? So anything above 155 to 160 is going to be profit. So as we get closer to expiration. So let me put this at I'll put this at, 158 or something like that, just so you can see what the potential is. But the big key thing, remember, is your risk. Okay. I always look at the risk first, and then I'll look at the potential return. So here it is. If it's trading at 158 next week on the 8th, okay, this would be up $98 or $99 on your risk of, say, 39. So there you've got almost a 2.5 to 1 return. Now, if we are trading there on Friday, the expiration day of the 9th, in the morning, this would be up $140. And at the end of the day, if it's trading here, this would be up at 158 right there. I just see that point, that the vertical line there. I put this over that teal colors where it is at expiration. This would be up $268. Right. So that's the beauty of it. And then if you're totally wrong, you lose 39, or what we'll typically do, we would put a 60% stop. So we maybe lose $10. Right. So this gives you a lot of leeway and flexibility of things you can do. So that's one we were looking at. And then another one that's really great for these types of trades is Tesla again. So I showed you that earlier on Tesla. So this is another one that we're looking at. And this one would be potential target. We'll see where it is. We have a potential target for next week, maybe to 250 or down to 200. And so we could do a butterfly, targeting 250, and then we could do another butterfly at 200, and we could really bracket this with that kind of trade. So just a lot of things you can do once you understand how these spreads work, and control your risk. And you don't have to be glued to the screen all day. I mean, day trading is a great way to go, but if you're not able to day trade, you don't have that time, these types of trades are really, really a great way to go. And they're fun. They make you think, it's a really great thing. If you like to play cards, if you like to play chess, something like that, I always say, learn how to trade options, because you're going to really enjoy the thought process. So And if you'd like to kind of test drive this, I've got a special here for you today, and you can. I've got a really good special actually for $7. If you can put that link in, I think I can put it there, or you can put it in for them.
Yeah, we got it there.
Okay. So if you want to test drive PowerCycle Trading, my trading club, what I'm going to do something special, which I've not done before, is I'm going to give you for $7 if you sign up. You're going to get membership for my trading club for 30 days. You're going to get a trial membership for that. But you're also, and I've never done this before, you're going to get 2 weeks to my alert service. Okay. So yeah, it's a lot of work that I do to put out the good trades, but you're going to get 2 weeks to my alert service, and then you'll get a 30-day trial membership to my trading club. Okay. For $7. So just, put a little skin in the game, $7, and then sign up. And you should have the link, but it's powercycletrading.com/trial. So what you're going to get with my 30-day trial membership, and you can start this when you want. You can start your 30 days when you want, but you'll get access to my virtual trading room. So this is open every day from 9:30 to 10:30 Eastern, all right, during the week. And we focus here, on directional trades, the timing of those trades, but then we use options for the trades, different option spreads, a lot of different ones that will vary and use. Now, then I do a daily video newsletter every day after the close to tell you, my perspective on the market, where it's going, what trades we're looking at. And then we do member videos or archive. Then every week we do a live Q&A, which is then also recorded. So for our members, then with your membership, you're going to have a nice free trade educational vault, a lot of good educational material. But then the other thing you're going to get is 6% discounts off on any of my courses or my trading software on my website. I've got a lot of trading software, so you'll get all that. And just, I have got a lot of great reviews and testimonials. If you go to my site, you can see. But, for example, Mike, he joined the trading room for a year, and he said it was a bad decision having other trading rooms. So if you've been, he said, you have been the best at explaining and teaching various aspects of trading. Thanks for the great deal of expertise. Love the trading room. And then, just another one, just Vinet, trading room experience daily is awesome. You cannot get anywhere in real time, nothing like it. So that's just a kind of overview there. But then for the elite service, this is what I call it, for 2 weeks, you're going to get access to, I have 5 different alerts that I will send out. So you'll get that for 2 weeks, and then you're going to get the membership to the trading club for a month. Okay. So with the alerts, I have different, depending on what the market's doing, I will pair it with a certain option spread. So you might get what we call a calendar or calendar diagonal trade. You might get a selective butterfly or long condor alert sent out. You may get one of those monthly, pinning trades that I showed you on Tesla. You may get a breakout or reversal type trade, which these are a lot of times would be a credit spread. And then we do very selective earnings option trades. Like we did one last week. We did it on Colgate. We did what we call a double calendar. And this was put on for the risk of about, I'm trying to think back, about $25. And it made, over 100% return. It made like $35, $40 on a risk of $25. I mean, just little trades like that or big trades. It does, just variation. So when I send it out, you'll get a trading guide. The video will give you a trading guide, not a video, but a trading guide for the trade. Then I do a video of the trade that night so you can see what we were doing, why I did it. So you'll have access to that. Trades are listed and archived. And then you're going to get access to that weekly trading room for 1 month, video newsletters for a month, and then access to the virtual trading coaching room for a month, discounts on everything on my website for a month. And then if you want to stay on, you can do either a 30-day membership, or you can do a membership for, I'll give you a four month for the trading alerts. So basically, this is what I put together based on my trading career and based on using options and then using my directional trading system. So if you want to stay on, if you like everything and how it's going after the trial, for $7, then if you want to stay on, you can renew the alerts in the trading club for 30 days for $147. Or if you want to do it on a 4-month basis, you can do a package where it's $440. All right, so very, very low cost if you break that down by a day. And so you won't have to go through finding the trades is the hard part, really. So you won't have to do, that, combing through hundreds and hundreds of stocks. No more debilitating confusion over the best option strategy to use. No more agonizing over the best trade timeframes. Okay, so it's all done for you by me, and then I update you, daily on what's going on. If there's something that needs to be done to the trade, adjustments, I'll update you and tell you what's going on there. I'll show you some examples here in a minute. But here's just a little feedback. Here's one from Dan. It said, "You're very diligent and totally thorough with your analysis that is the foundation of the success of your alerts. I paid for my subscription with the first 4 trades that I took with you when I was just learning how to trade options." So this is a lot of members who will do this. They'll see my trade. I'll very descriptive in how to put the trade on. And so Dan was just taking the trades and following the alert, and he was learning how to trade options, and he made some pretty good money just off the first 4 trades. And then Scott said that'll be the best investment that you will ever make. Go with the elite package and great group of traders. So here's just a summary of the alert service since inception. And again, these are unaudited, but just to give you a summary. So I started the first alert service. This was a breakout trades basically back in May of 2018. And so through today, we've had 758 trades closed out, 547 winners, 50 break-evens, 161 losers. We're running about 79%, winning rate. So try to keep the winners really high. And these are low-risk trades. I try to keep the trade results or risk super low. So when you get it, I'll give you a suggested option trade. A lot of members just do their own thing. They just want the setup, so they'll just maybe buy the shares, or they could buy, long calls or puts if it's short. But I'll always give you an option spread trade. I'll give you the entry levels, the profit target levels based on what I call unusual option activity and what price target mapping. It'll tell you what option series to use. It'll give you stop loss guidelines and levels. And then I'm constantly updating these, and then these are archived. Now, then I do, like I said, set up video review of the trade after the close that day, along with my video newsletter. And then you get the weekly Q&A. We'll do access to my virtual trading room, 60% discounts. So here's a couple, examples. So what I use what's called Telegram, and this goes out when I send the alert out. This goes out within seconds. So this is one that we did. This was on XLU. This was a binary calendar option, but I just wanted to show you. This was Telegram. This is the app that's used. It's free, and it goes out within seconds. So here are a couple of examples of some trades we've done recently. These are the butterflies, and I started this alert part of the alert service back in May of 2019, and through today we've had 177 closeout trades, 124 winners, 13 break even, 40 losers. So run about a 77% win rate. But these are very low risk. Average maybe risk around $50 to $75 per spread. Potential to make returns of 2 to 1 up to potentially 25 to 1. And so here are a couple of examples. Here's one that we did just recently. This was on ConocoPhillips. This was a short trade doing a long put condor. Okay, so look how low and small the risk was on this trade. So we were looking for a downside move on Conoco. It was trading at 112.35, and so we sent out this alert. So new Conoco short. Trade at 112.35, momentum short. So it's based on a breaking of a key support. So based on a break and a close below today's prior week's low at 112.99. So very descriptive. First target 111, next target 110.50. So it says buy a condor. Okay, so that's basically, I'll show you what that is. The 112, 110, 109. So very descriptive. 48 cents. That's $48 of risk. If you did one spread, your potential max risk, you would lose $48. Now you can stop that out, with less than that. Maybe you stop it out with a 60% or 50% of that. But that's basically it. And here it was on the 26th. It was now trading at 110.34. So we had the trade at 112.35, target at 110, the next target 110.50, and it was trading there at 110.34. So this was up, at that point it was up $100 per spread. That's a 208% return. All right, on that risk of 48. So you can see the whole thing I focus on first is risk. So we sent out the trade. Here it was going short at that on the 22nd at 112.35. So some members just wouldn't do their own thing. They may have just bought puts here, for this downside move. And then we had a profit take on the 24th, and we had a profit take on the 26th. And at the 26th, it was trading at 110.31. So here's what the trade looks like when you set it up. So here's the analytics, the risk profile. So this was long a put debit spread, which is a short trade setup. So the 112, 110, and then it's short against it. So it's long short trade, and it looks like this right there. So then it was short a bull put credit spread, the 109, 107. So we did this. By doing this, we reduce our risk to $48, plus it gives us a positive theta. So no negative theta, no time decay. And it was a $2 wide spread, 112, 110, $200, risk of 48. So potential to make $152 if it goes out in there. So that's a 300% return on that risk of 48. So then it went out, not exactly, perfect, but it went out close enough right there. It was still up. That spread went from $48 right here to 154. So it was up $106, and the risk was 48 right here. So that's a 220% return. Okay, so that's the thing I love about the options, but option spreads, not just buying options and selling options, but doing them as a spread. So I showed you this one earlier, so I won't go through that, but that was the Tesla. And then another one we do quite a bit of, I'll show you this one more. This is the counter and counter diagonals, and we do a lot of these as well. And with this one, we started this one back in June of 2019, and through today, we've had 291 trade. Again, all these are unaudited, but 291 closed out, 213 winners, 15 break even, 63 losers, run about a 78% win rate there. So here's one we did recently. This was a pretty cool one. And the thing is, I like spreads because I've always liked spreads. Even, when I was running a trading group, we would do thousands of spreads because I like thinking about all the different possibilities. Okay. So when you do a spread, you can make money so many different ways other than just going, having it go up or down. So here's one that we did on Starbucks. This was a short trade that we set up initially doing what we call a calendar, but this shows you the variation. So this was a short. It was on the 26th of June. It was trading at 78.67. So then we did some adjustments. I won't go through everything. I don't have much time, but then we had adjustment on it, and we actually adjusted this to a butterfly where we ended up with zero risk. Okay. No risk in the trade. And we ended up making a pretty decent profit on zero risk. So here it says new Starbucks short trading at 78.67, daily cycle high retracement reversal, okay, to the downside, daily negative momentum. We had what I call 513 downside cross, which is a moving average cross. So we did this starting out as a calendar, and we did this for the risk of around $52, okay, per spread. And then we had some adjustments. So I'll just kind of circle that. And then we ended up adjusting this to a free trade where we had zero risk. We started out with a risk of 52, and we ended the trade with zero risk and a potential to make a really big profit. And that's kind of the ultimate goal. So here's what the charts look like. And again, this is my trades are all based on direction and timing, and then using options for the risk. So we started out right there. That was where the short was, right there. Okay. So a lot of members do their own thing based on, a breaking of key areas of price, momentum. Okay. And then, so we did this with the original trade was a calendar for super low, and then we adjusted the trade. So you'll get the adjustments. I send all those out. And so we originally did this as a calendar, but then the first adjustment was adjusting this to a put calendar, okay, where we had the risk adjusted down to $32. So this was a great trade just on its own. So we originally, remember, started out with the risk of 52, and then we adjusted this into a put calendar where now we're long the 77, 76 put. You'll learn this in my my trading room and through my courses. So we adjusted that risk down to $32. And at the 5th of July, it was trading out 76.03. So it went from 78.67 to 76.03. So just this adjustment right here, the spread went from 32 up to 142. So this was up $110 or 144% return. But the other thing we did, so what we'll typically do, it depends on if your contract size, we'll take some profit like this, and this one, then we adjusted the balance to a free trade using the butterfly. Okay. So we were able to do this into a free trade. So our base price was, we were long that 77 put. So we're long the 77 put. And then we adjusted this into the 12 July series. Then we sold the 75 put below it. Sold the 75.73. That's a bull put credit spread. So we had this trade on for a $2 wide spread, right? Which is $200. And we actually had a credit now of $8. So the potential then, we had a butterfly with actually $8 credit. So if it went out, below here or above there, we still make $8. If it goes out here, we can make 208 or anything in between. So this is needless to say, a great way to get a strategy where you can get into this. So it went out, right in here. So it was up $78 per spread on a risk of 0. Now, we didn't get the full thing, but this gives you the potential to make these types of returns. So it's pretty good, pretty cool. And they're fun because, it makes you think, and that's the thing that I love. So if you'd like to take advantage of that, please join me for this free trial and use that link there. And you're going to get, once we get you set up, you'll get 2 weeks of alerts. And then you'll get that 30-day trial membership to the trading club. And if you have any questions, let me know. I'd be happy to answer any questions, with any time I have left here.
Yeah, Larry, that worked out great. And if anyone has any questions, like I said, please go out there and share it. But Larry, like I said, I use Telegram also. I think that really works really cool. Send out alerts like that. Yeah, we just started using it. We used it a while ago, but now it's like, we have our own alert service with our trading system, but sometimes it's a little bit easier having that platform, and it's a great tool to use it. But yeah, I mean, listen, Larry's been doing this for a hell of a long time. So if there's anybody knows anything about that, and you know what, like I mentioned earlier, like with you, Larry, we're talking about it, that there's just so many people out there think, or has a style of trading options. I tell everyone you should try a little bit of everyone's stuff. That's why he's just doing a very inexpensive trial. And everyone should try a little bit of everyone's education. Just, you don't have to spend a lot of money. Just spend a very little, because it might not be your style. You know what I mean? It might not be yours. And that's okay. I tell them, I say, some people look at me and they're like, "Man, listen, I might not be your style." So,
you can use Robinhood. Yeah. Somebody put up, you can use whatever platform you want, for the options. If they have options on their platform, you can use them. So whatever broker you're using, go for it. But when I'm teaching and doing stuff, I use Thinkorswim, but you can use TradeStation, you can use whatever. Robinhood would be fine.
Yeah, I'm actually, I'm glad that you brought that up. The person on YouTube right now said that if you use Robinhood, I'm actually gonna be doing a video. I'm working on it now about the best platforms, brokerage firms to use for your type of trading. And once again, I might say it might not be good for what I'm using it, but it might be good for you. Like Larry just said, he uses Thinkorswim, you use Robinhood, you used it. But, depending on what kind of trader you are, if you're a hybrid, one brokerage firm is going to be better than this one. If you're from a different country, well, guess what? You're only limited to use that brokerage firm. So you want to kind of use that. But the key is, just don't focus on the brokerage account right now. Focus on the educational part about it. Let's see if you could do it first before you can go out there. So do the trial. But Larry, listen, thank you so much for having us and having us coming on the show. And like I said, I look forward to talking to your audience too and your fellow traders. And like I said, for everybody here, I always like to tell everyone, you got to learn before you can earn. Thanks for listening in. We'll have this video up pretty shortly for everyone to watch. If you're watching as you can watch it later, we'll have some quick shorts, some highlights of it. So make sure you subscribe to the channels, give it some thumbs up, and ring that bell to get the alerts every time we're on. And make sure you subscribe to all the social network channels so you can get on whatever you prefer. Thanks for listening, everybody. Larry, thanks for being on the show.
Thanks so much for having me, Fausto. Thanks,